JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 23rd of June 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yes, check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I'm going to pick up here is the well, it's the Nikkei, of course, as always. So basically, for now, looking at this here, you can see that we have pushed higher a little bit here. Well, at least we tried to push higher. The markets did get calmed down, did kind of calm down a little bit. The fear that calmed down because yesterday we had the statement testimony from Jerome Powell, so he managed to calm everybody down. So here the markets did, especially the U.S. ones, did push nicely to the upside. Here Nikkei, it did make its way higher as well. However, as you can see, it drifted back down and kind of stayed near the 21-day EMA here, shown as the yellow line. So that's why for now, basically, what I'm going to do here is I'm just going to wait, because although yes, there is still a chance for this one to drift higher, as long as it stays above the 21-day EMA, then yes, we could aim for this downside resistance line, the one that I talked about yesterday, taken from the high of the 16th of February. And then, of course, if that gets cleared, then yes, higher levels could be met. But at the moment, let's keep it short and simple. For the downside, now this is where I talked about this 28,711 zone, but to be honest, I'll have to rethink here a little bit, because this is probably what I'm going to look at, the low of the 2nd of June, and that's roughly around the 28,565 territory right here, which also coincides with the 100-day EMA, shown as the green line. And then yes, of course, if we get a drop below this, then this could open the door towards slightly lower areas. Of course, again, at the moment, guys, I would say that this is a little bit of a difficult one here, but I would say like this, that as long as it stays above the 21-day EMA, there is still a good chance for this one to make its way higher. Shanghai Composite, looking at this picture here, the technical picture, of course, and we have climbed back above this 3,562 territory. I spoke about this level, and what I said, that if we climb and stay above it, then yes, we will aim for slightly higher levels. But at the moment, guys, the index is not it's still running, it's still open. Let's see where this is going to end up the day. But don't get me wrong, for now everything's looking still quite positive, and I would say that as long as it stays above the 3,562 territory, then yes, there's a decent chance for Shanghai Composite to make its way higher. But this is where I'm going to aim for the 3,626 level only, just because it did provide decent resistance previously. For the downside, well, if it somehow falls back below its let's say, today's current low near the 3,550 zone. At the same time, the price would be placed below the 21-day EMA, and potentially more sellers here could join in. But again, at the moment it's leaning a little bit more towards the upside, especially if it continues to balance above this 3,562 territory. The German index, DAX, and yes, so here we had a good push yesterday to the upside. However, still it remained below this downside line taken from the high of the 15th of June. Now, in a way, what could happen further, of course, is we could see that further push north. We could see a test of this downside line, but if it struggles to overcome it, then another slide here might be possible. And yesterday I talked about this 15,309 zone, but to be honest, if it starts falling somewhere already below this one, below the 15,505 zone, then yes, we could aim for lower areas, and yep, we could aim for that current lowest point of this week near the 15,309 zone, or if that gets cleared, of course, a forthcoming lower low would be confirmed, and then yeah, lower levels could be met. But at the moment, let's deal with this downside line. Let's see what it wants to do with it. If it continues to provide resistance, then yes, another slide could be possible. If it gets broken and we see the price climbing above the 15,732 territory right here, somewhere around here, then yes, this could start opening the door towards higher levels. The S&P 500, now, yesterday, good run to the upside, and let me just adjust this one a little bit here, guys. So, we could draw some upside lines right here, guys, but yeah, let's not forget that all of them are still tentative. Now, what you should be kind of focusing more here is that we yesterday pushed higher again, and we came close to testing the all-time high, which is roughly around here, the 4,257 territory. So we came very close to hitting that area, but as you can see, just kind of still remained below it. Now the big question here is, can we do that today? Can we overcome that area today? Well, let's wait and see. If that gets cleared, of course, yes, this will place the index into uncharted territory, and well, basically, first of all, of course, it will confirm a forthcoming higher high, potentially attracting more buyers into the game. But then, of course, we'll see where it wants to go further. On everybody's minds probably will be that 4,300 level, the psychological 4,300, which could get tested, of course. But again, let's not rush into anything. For now, let's keep an eye on this 4,257 territory. If that gets cleared, then yes, higher levels could be met. The XY, the dollar index, so drifted to the downside, and most importantly, it fell back below the 200-day EMA, and yep, it drifted here, and it's currently still sitting below that 200-day EMA, so which means that if it continues to trade below it, then there is a decent chance for a larger correction here to the downside towards maybe this 91.42 zone, or we could end up testing this downside resistance line from above, and this one is taken from the high of the 23rd of March 2020. So let's see if this this line acts as a good area of support. For now, of course, let's be very careful here. Don't get me wrong. I mean, if it suddenly starts climbing back above the 200-day EMA and climbs above the 92 territory, somewhere around here, then yes, we will aim for the upside again, or should say we will get a little bit more comfortable with the upside again. But at the moment, guys, I mean, it's at this point in time, it's a little bit tricky here because we're currently sitting below the 200-day EMA, and this increases the chances for a possible larger correction here to the downside. Now, jumping into gold, and gold, of course, will keep an eye on the it will keep an eye on the dollar activity here, and for now, I mean, I would say that yesterday was a bit of a down day here, but today it's kind of trying to get back on track. I would say to guys for you that basically if it continues to trade above somewhere above this 1765 territory right here, then there is we might see still that larger correction to the upside, because this is what I'm kind of leaning for right now, and where we could test the 1797, 98 territory here, and around, of course, not far from that psychological 1800 level, or even we could test the 208 EMA marked by the near the 1809 territory, which is the low of the 13th of May. So again, there are a few options. If you're looking for the downside, then probably just stick to this level for now, because again, it's a little bit tricky here. So this 1765 territory, 65, 64, somewhere around there. If we get a nice drop below it, then yes, I will go for that larger move to the downside, where we could end up testing this long-term upside support line taken from the low of the 20th of May of 2019, guys. Now, jumping quickly into WTI oil. So yesterday remained flat here, kind of formed a doji, and of course, as you know, the dojis tend to be bearish indications. I mean, not bearish indications, reversal indications. However, if we take a look at history here, that wasn't the case all the time. So, for example, here on the 25th of May, we also had a nice rally here, a nice push higher. Then we found resistance when we formed a doji, and this is probably where a lot of traders were coming in, as well, a lot of sellers were coming in and then trying to capture a move lower. But as you can see, it ended up pushing higher, and it kind of probably wiped out a lot of sellers here. But basically, be careful with such scenarios. For example, when we do approach an important resistance, like for example here, we do form then a doji, then it might not even be a reversal signal. It might be more of a maybe of a regroup, let's say reposition for the bulls. Let's say in this specific scenario, for the bulls to reposition themselves and kind of attack again. And as you can see, this is what they did. So yeah, the same story here as well. So if we continue to trade above this short-term upside support line taken from the low, the 27th of May, we are currently above this 77.70 territory, which is the highest point. That's not the highest point. This is right here. If I'm not mistaken, that's the high of the 15th of October of 2018. So my next target is the highest point of 2018. That's what I'm aiming for. The 76.88, something like that, 76.90. So that's what I'm going to be looking for here. And so if we continue to trade above the 72.70 zone, then yes, I will continue aiming for that highest point of 2018. Very quickly on Ethereum, so yeah, the cryptos continue to drop. Today we're seeing a nice little reversal here to the upside. You can see that the Ethereum here dropped to this 1732 territory marked by the low of the 23rd of May, or in other words, the lowest point of May. And I talked about this level and I said that if we slide somewhere below here, below this 22. 58, 59 zone, then yes, if we stay below this hurdle, then our next target is the 208 EMA, which if it gets overtaken, we could aim for that lowest point of May. And so far, so good. Everything's kind of working out nicely here. So basically, yeah, we've managed to reach our target. Now we need to see what it wants to do further. Of course, we do have this medium term, or actually more of a short term tentative downside resistance line taken from the high of the 12th of May, which is still in play. We also have a very, very short-term downside resistance line right here taken from the high of the 15th of June. So probably you might as well keep an eye on this one first. And if it provides resistance, then yes, another slide could be possible. However, if you're a little bit more on the careful and cautious side, what you can do here is just probably wait for a drop below this hurdle, below this 1732 zone, and then we could start looking at some lower levels. And with the lower levels, I mean, keep your eyes on this upside line right here, which could still provide support. Litecoin, very quickly on Litecoin, and this one also dropped, also tested the lower side of the lowest point of May, and near the 118.50 zone, and you can see it provided very decent support, although we did saw a drop below this in a false breakout, but as you can see now it's drifting to the downside here, drifting to the upside here a little bit, so trying to recover some of its losses. But I would say that I'll keep an eye on this downside line here, so I'll give it a plenty of room here for a possible larger correction. Another thing to keep in mind, of course, is also this downside resistance line taken from the high of the 15th of June. So basically we could get a hold up somewhere around here, and then we could see maybe another slide. But either way, I would be looking for a drop below this 118.50 zone in order to go for lower levels. Now jumping into a few pairs, of course, AUDUSD is quite an interesting one because we're currently oscillating just around that 200-day EMA, and that's not really helping neither of the sides, neither the bulls nor the bears. In a way, we could of course like to see maybe this one going for a bit of a larger correction here to the upside and then reversing and dropping back down. So I will consider this scenario if we push through yesterday's high near the 0.7564 zone. If we climb above it, then yes, I'll aim for some higher levels, but of course I'll be very careful and very cautious, just because again we might see this one traveling a little bit higher here, maybe finding resistance somewhere here, and then reversing back down. But again, that's not the ideal scenario. The ideal scenario is to see something like this right there. Yeah, let's see if that's going to work out. However, if it starts falling back down here and falls back below the 0.7532 territory, somewhere around here, then yes, of course, lower levels could be met, and we could aim for that 0.7478 zone marked by the current lowest point of this week. NZDJPY, very quickly on this one, so having a nice little recovery here. So yes, still kind of trading below some of these upside lines. I mean, all of them are tentative. I mean, one of them is this one right here, but I'm not going to drag this one way too much to the right here. But and of course we do have this this downside line, which is taken from the high of the 28th of May. So in a way, I would say that if we climb higher here, find resistance near the 78.05 territory, somewhere around here, and we struggle to overcome it, then yes, another drop lower could be possible here. What I'm going to aim for then is not going to be this one, but I'm going to aim for the current lowest point of this week near the 76.22 zone, and then we'll take it from there. For the upside, what I need here is probably a break of this, well, not probably, but a break of this downside line, and with the upside it's a little bit tricky here. Looking for a nice good barrier here for an upside, but everything kind of leans a little bit more towards this one, towards the 79.14. However, maybe that's going to be a little bit too long to wait, so maybe I'll start looking at the upside already on a push above the 78.60 zone right here. USDJPY. So yeah, this one's looking a little bit more interesting and pushing higher, and we're approaching now this 110 point, let me just grab the 110.97 territory. So a while ago, when I talked about USDJPY, I said that or actually it was more of a last week. So when I said that we failed to reach this hurdle and then started drifting lower, but what I said was that as long as it stays above this 100-day the 21-day EMA, together with this upside support line taken from the low of the 6th of January, then yes, there is a good chance still to see a push higher. And well, what you can see here, you can see that yes, we had a nice rebound, and then I said that if we climb back above the 110.33 territory, this could strengthen the upside scenario, which it's currently doing that. So we are still aiming for this highest point of March, or in other words, the current highest point of this year, and we want to see if we are actually going to go and hit a new high here, and we will go and overcome this barrier, but of course let's not rush into anything. For me to consider further upside, I would need also to see the daily candle staying above this barrier. For the downside, I would need to see a drop somewhere below this area right here, the current lowest point of this week, near the 109.72 zone, approximately around here, and then yes, lower levels could be met, guys. GBPUSD, very quickly on this one. So yeah, again, after reversing back above this upside line, I talked about GBPUSD yesterday. So after reversing back above the this upside support line, tentative of course, but nevertheless, kind of played out, and we've also managed to climb back above the 100-day EMA, here shown as the green line. So far there is some positivity here, but again, don't get me wrong, I mean, even if we push a little bit higher here, we do have some obstacles on the way, like initially, for example, the 21-day EMA, and then maybe this downside resistance line taken from the high of the 1st of June. So there are a bunch of obstacles here on the way higher, but again, don't get me wrong, in the very near term we could do that, especially if DXY continues to drift to the downside here a little bit. Then yes, GBPUSD could make its way towards, at least towards the 21-day EMA. GBPCHF. Now this one's interesting. We are climbing higher here, and the most important, finally, we managed to stay above the 1.2790 zone. You can see the daily candle remained above it, and of course, yes, this is what I keep talking about. So now, of course, don't get me wrong, it doesn't mean that now it's going to be 100% that it's going to go higher. No, it just increases the chances for a further move north. So this is probably where the point is, that if by any chance this pair suddenly starts dropping back below the 1.2790 territory right here, yes, we could consider maybe a bit of a decline here again. But at the moment, guys, everything's looking quite positive. We are above yesterday's high. So, yep, our next potential target here is the 1.2917 zone, marked by the inside swing low of the 30th of March. Now, GBPCAD also, something that I wanted to pick up on here, and basically something for you to keep in mind. Oh, and by the way, the reason we do have some data here from UK today, of course preliminary, but nevertheless we have the composite, manufacturing and services, so all coming out. So currently the expectations are a little bit on the mixed side, so composite and services are expected to the composite and manufacturing expected to decline a little bit, but the services one is expected to have risen, but again only by 1/10. So again, I don't think that there's going to be a lot of activity maybe from that from that news, but yeah, we will certainly keep an eye on it. But here, GBPCAD, the reason why I wanted to pick up on this one is because it's quite interesting, and you can see that the pair is currently coiling up. It's getting a little bit squeezed here, so basically we are waiting for that pop out, and yeah, so if you want to go for, and oh, by the way, coming back again, previously when I looked at this one, I said that we need to see a nice good push above this 1.7171 territory in order to aim for some higher levels. But what I said before, that I will only aim for this downside line initially, and you can see why. We tested that, and we then drifted back down. So now we first of all, we get rid of this hurdle. We no longer need it. That kind of was, that's done and dusted, and what I'm going to be keeping an eye on right now will be the current highest point of this week, near the 1.2260 zone here. And for the downside, I will keep an eye on the low of the low of the 18th of June here, and that's Friday's low, last Friday's low. So, and that's roughly around the 1.7143, and that gets cleared, then yes, one of these levels gets cleared, then, well, this could open the door towards the next short-term directional move. EURCHF, quick update. So after we had a nice rebound from this upside line here, the pair is back in the falling channel pattern. However, it's at the moment it's moving higher. So yep, we're making our way towards the upper side of the falling channel. Let's see if that's going to happen or not. But at the moment, everything's looking quite positive. So yeah, that's what we're aiming for right now. And yeah, so if we come closer and test this upper side of the falling channel, then it's going to be very interesting to see if we can actually break it or not. Then we'll keep an eye on this barrier here, the 1.10 zone. Psychological 1.10 territory. If that gets clear, then yes, certainly, of course, higher levels could be met. And finally, EURUSD, guys. So yeah, we got held here by this 200-day EMA together with the 1.1943 zone. So everything kind of is, yeah, looking quite nice here according to the plan. And the plan was that if the 200-day EMA continues to provide resistance, then yes, another slide here could be possible. However, in the beginning of this video, I said that keep your eyes on DXY. If DXY suddenly starts drifting nicely to the downside, then we could expect EURUSD climbing back up here, maybe above this, yeah, above the 200-day EMA. And then what I'm going to do here is I'm going to keep an eye on the lower side of the falling channel here. I'm still keeping an eye on it because although it did get violated here, but let's see if this line here, the lower side of the falling channel, provides good resistance. So yeah, for now, again, what I'm going to say here is that as if the pair continues to trade below the 200-day EMA, then yes, we could see a nice decline here again. We can see a move lower. But if it suddenly climbs back above the 200-day EMA, then don't get me wrong, it's not over for the sellers here, because they could still come in somewhere around here and drive the pair lower. But again, at the moment, at this point in time, guys, we are keeping an eye on some of these levels. Probably what you can do here is keep your eyes on the yesterday's low as well, near the 1.1881 zone. And if we suddenly, let's say, clear that one, then, well, I mean, lower levels could be met. But at the moment, you can see that the pair is fine. It's kind of trading near that inside swing high of the 18th of June, and that's roughly around the 1.1925 zone. So if by any chance it continues to trade above this barrier, then yep, maybe we could see that little push above the 200-day EMA. But again, we are, like I said, we're at the moment we're in a very tricky spot here. This is the point where I would say I will stay away from it, and I will just observe, and I want to see how it's going to play out. If it climbs above the 200-day EMA, yes, that will be a little bit more interesting. But if it stays somewhere around here, I will not touch it, and I'll just continue observing the price action. So guys, that's it for this session. I hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, guys. I really do. So thank you very much for that. If you want to join me tomorrow morning, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful, wonderful trading day today, guys. Stay safe. Have your stop losses in place, and everything will be fine. Bye-bye.